Do my backup record. It's a shame we didn't get that on a recording. For Dennis. Hi, Dennis. Hope you're well, mate. 1, 2, 3, clap. Welcome back to QAV. This is episode 621. We've just been talking about sex palaces off air. You missed out on a great conversation. It's the 23rd of May, 2023, 2:22 p.m. on the East Coast. Would have been my dad's 74th birthday today if he hadn't died 22 years ago. How are you, TK?
Good. We were talking about Tiberius, and if anyone wants to know the context of the Sex Palace conversation, look up Tiberius and the
that's where
history
it started.
Yeah.
Listen to my Life of Caesar series. It's a lot of fun. Or just watch the opening of Caligula, because you see his sex palace in the opening of Caligula. That's where the great Tito, whatever his name was, film, Malcolm McDowell film from the mid-70s. Yeah, it starts in Tiberius's sex palace with Peter O'Toole as Tiberius, enjoying his debauchery.
well named, Peter O'Toole.
Particularly for that film.
Yeah. Oh dear.
You see a lot of tools in that film. Rough week in the markets, TK.
You got to laugh, haven't you?
Yeah, or cry.
Yeah.
Yes, rough week. Picked up a bit today, but it's just been a lot of selling. I don't know about you, but particularly for the light portfolios, hasn't really affected the dummy portfolio a great deal. Or I think I had to sell maybe one thing out of my super, but for the light portfolios, I've had to sell a lot in the last week, and it's been very tough to find much to buy. Very tough.
Same. I had to sell a couple of gold stocks I had, Perseus Mining and West African Resources today, or the last 2 days. And I haven't been able to find anything to buy either, so I'm sitting on a bit of cash. I can't even double buy something. That's how light on the pickings are at the moment.
And it's not because gold's not a sell, right? It's just a Josephine. They were
I think I was
3 PTL
out
or
of
something.
both of them. Yeah.
Right.
Yeah.
Wheat did become a sell when Alex did the charts for us on Monday morning, which meant I had to sell GrainCorp out of the light portfolios. So it's been an interesting time.
I'm also running just a paper portfolio for QAV stocks above a score of 0.2, and I only managed to buy 2 stocks for that portfolio in the last month or so since I started it, and I had to sell both of them, so it's sitting in cash. So that's how difficult the conditions are at the moment.
Well, I want to talk to you a bit about that when I get to the light portfolios, because I seem to have been sitting on a lot of cash for a long time in the light portfolios, and it's hurting us comparatively. Looking at the STW, when you're sitting on a lot of cash and it's not doing anything, you're going to underperform the index, right?
Yep.
But before I get to that, let me talk about the dummy portfolios. So I did my weekly report today, and just again for my own sanity, reminded myself that when I look at the 2-year all odds chart, it's barely gone anywhere in 2 years. It's pretty much exactly where it was 2 years ago, maybe up by 3-4% or something. But it's been a 2-year holding pattern, more or less, for investors. Yeah, it's gone up and it's gone down, but if you compare today to where it was 2 years ago, it's barely moved. So it's no wonder then that the dummy portfolio over the last 2 years is only up 6 or 7% per annum, CAGR per annum over that period, versus the STW, which is pretty much the same, a little bit ahead of us today, but give or take, it's pretty much neck on neck over the last 2 years. So it feels like a lot of hard work to do nothing.
Yeah,
a lot of hard work to get nowhere in 2 years.
Yeah, that was the old rule when I was working corporate. You got paid bonuses every year until the year you worked the hardest and you got nothing. That was usually the case, right?
Yeah, we've done way more selling in the last couple of years, way more trading than we did in the early days of the podcast for no return. But I guess that's doing the trading because the market's bumpy. Right?
Well, yeah, I mean, interest rates have had a big effect, I think, on the market. The rising interest rates have had an effect on the market, big effect.
Rising interest rates, trade wars, real wars, It's been a bumpy couple of years.
Yeah, and having said all that, getting 6% or 7% a year during that kind of turmoil is pretty good.
Yeah. And then I look at the 10-year All Ords chart, which looks great. It's gone up a lot in the last 10 years. So I wondered to myself, well, what will it look 10 years from now? 10 years from 2 years ago, 8 years from now.
If we knew that, we wouldn't have to worry about investing ourselves.
Well, we kind of do know, right? Unless history is being, unless this time it's different, Tony. This time it's different, Tony. It's always different, Tony. Unless it's different, the market always goes up over 10 years, right? Historically.
Well, it should, yeah. It's on average, it goes up 10% a year historically. But, there have been long periods like GFC, 10 years since the GFC, it's basically back to where it started from.
That's right. Yeah. But that was a big tank, right? GFC. But anyway, the QAV report since inception for new listeners, that's September 2019. Dummy portfolio is up around about 16.24% per annum, according to Navexa, versus the STW, the SPDR 200, which is up 7.18. So we're still doing about 2.5 times better than the index since inception. This financial year, though, it's up 16.5%. We're up 8.5%. For the quarter, it's up 1.6. We're down 0.25% now. We were ahead of it for the quarter a little while ago, early on in the quarter, but we've taken a bit of a dive recently. Yeah, so it's been a difficult period. Haven't been sitting on cash in the dummy portfolio, though, so I can't blame that. We just had a couple of stocks. Well, nothing's done really well. It's kind of been tough times.
And I think there was, according to Navexa, the report I got, there was one big drop in the dummy portfolio's holdings.
In the last week?
Yeah.
CLX, which we're going to talk about. Bloody CLX. So when I checked my alerts this morning, we hold it in the dummy portfolio, and it's still above its buy price in the dummy portfolio, but I also held it in the light portfolio. When I checked my alerts at 8 a.m. this morning, 9 a.m., it had just become a Rule 1 yesterday afternoon, but it was like, 11% down. And the AFR said the market was going to go up today, and I had to go out for a couple of hours. I had to go to Kung Fu, whatever. So I thought, I'll wait until the market opens, and I'll wait till 11. You always say wait till 11 and see how things pan out. I was at Kung Fu, got back at lunchtime, and it had dropped another 9% this morning.
No. Yeah.
So it was down like 20% by the time I finally sold it. Checked the news, nothing about, what are they? CGI Logistics or something?
CTI Logistics, yep.
CTI Logistics. Can see nothing in the fin, nothing in Hot Copper, nothing in the news, nothing on Stock Doctor, but they're down 20% in a day. So don't know what the hell's going on there, but no bueno. Anywhere else I should look?
No, that's what I would do. I just had a quick look. Then I couldn't see anything to explain the drop.
Yeah.
Is it ex-dividend? In the market, hang on, let's have a look at ex-dividend.
Dividend was back in April. Yeah.
Okay.
I did check that. So, yeah, it's just one of those ones that came out of nowhere. And as I said, it's still above water, but it did drop. Actually, the report that I ran this morning on our last 7 days for the dummy portfolio said it was down 9%. It's probably down a lot more than that now. It was up, obviously. It's still above water, as I said. So it was up like 20-odd% last week in our portfolio. And now it's probably getting close to a Rule 1. No, it's got a bit of way to go, but it's probably back to what we paid for it. The other one that shocked me during the last week was a Logio group, ALO, or as I was calling it on the day, how low can you go? How low can you go? On the 24th of March, and it was a good performer in the dummy portfolio, but on the 24th of March, they announced they'd entered into a scheme implementation deed with Next Capital pursuant to which Next Capital would acquire 100% of the company's shares. The proposal is to be implemented by way of a company scheme of arrangement for 30 cents per share in cash, which will be subject to shareholder and court approval. Now, at the time, it was trading around about 19 cents, 18, 19 cents, shot up close to that 30 cents, up to about 28 cents on the announcement. It was great. Happy days for everybody. QAV gets in there, finds a stock that's undervalued, buys it. Somebody comes along, pitches a higher price. Happy days. I'm drinking champagne. Then on the 15th of May, it goes into a trading halt. On the 17th of May, it comes out of the trading halt and announced, after a lower than expected April 2023 trading result, and with May and June 2023 results anticipated to be lower than previously forecast, the company's earnings have been negatively impacted. Share price collapsed down to 16.5 cents. And it was a 3PTL sell. We still got out of it at a slight profit, amazingly. But it just like something fishy going on there, I thought to myself. There's an acquisition underway. All of a sudden they go into a trading halt and then come out and say, nah, bad results are coming, and the share price plummeted. I feel like, they're Waystar Royco. Next Capital is Lucas Matson.
Gojo.
Gojo, yeah. He's like, oh, well, it's not that Logan died, but the results are down. The share price, like, why am I paying 30 cents a share for this thing now when your share price is only 16 cents a share? I think it's time to go back to the negotiating table.
Yeah, I should declare I know one of the directors of Next Capital as well. Not that we've ever spoken about this acquisition.
Oh, well, time to get that person on the show.
Yeah. If ASIC are listening, I haven't ever spoken to him, to Patrick, about this. And I don't know what's going on. But yeah, I did read through the announcements after you raised it before the show, and it does look interesting. I mean, yeah, they've come out and said they're not going to make the sort of projections they said they were going to make. But I think I had a look and it was only like $1 million less than what they were projecting. And it's a small cap company, so $1 million is probably, material, 25% of their profit maybe.
Yeah, right.
So my gut feel says that they're going to still do a deal. It may not be at 30 cents, but again, the announcement says Next Capital haven't walked away. They've triggered a mediation clause to talk about the takeover. So I don't know. I'm just guessing here. I suspect that they'll still do a deal at some stage. The share price has actually recovered today. It's back up to 19 cents. Yeah, from 16. It probably won't get back to 30 because if I was Next Capital, I wouldn't pay as much as I was originally offering if the company's come out and said we were earning less than we forecast. But who knows? I'm not part of I'm not in the room, as they say, to these discussions. But if the company was attractive a month ago and it's come out and said we're not going to make the same profit we're going to make, but we're still going to make a good profit, yes, I'd ask to revise my offer, but I maybe wouldn't walk away. So we'll see.
Well, that was painful.
It's painful, but it's also a small cap stock. I mean, that's the other thing too. It's such a low volume of shares. It's $40,000 a day, I think.
Yeah, right.
That's kind of volatility tends to go hand in hand with those small ADTs.
And of course, the instinctive or the instincts from QAV investors when something like this happened, and certainly mine was, well, this was an overreaction. We should just hold on to it and it'll probably go back up. It'll probably turn around. And as you say, it has come back a little bit, but rules is rules. So I did sell it on the day because it could have gone the other way too. It could have fallen further. So just to remind people, Allogio specialize in managing short-term accommodation from 1 night to 3 months for holiday makers, international travelers, corporate guests, government and private sector contractors. It provides these services through hotels, motels, and short-term rent rolls. So I don't know what's happening in the whatever short-term accommodation
Well, they came
market.
out. So I read the announcements, and again, I don't know this company very well, but they came out and said that they would normally expect to get higher rentals after Easter, and that they hadn't kept pace with last year, mainly because people are a little bit tighter on cash because of rising interest rates, or maybe a little bit uncertain, and therefore aren't taking as many holidays. So that's what they're saying. I did also note, and again, I could be reading too much into it, that they diversified into a company which I think did laundry. So I'm not sure whether that was a chain of laundromats or whether it was like a commercial provider of laundry services, and that was underperforming. But the good news was that they weren't having to pay the earnouts to the company that to the people they bought this company from, because the profit was down. So I hope if I put my Machiavellian cap on and I say, well, I just bought this company and there's earnouts, if it doesn't work out as well, then I don't pay them the earnout and I actually save money, even though I lose a bit on the operating line. I hope that's not one of the reasons why they've had to report a reduction in their forecast profit, which has caused Next Capital to walk away. They may have been too smart for themselves, but that I'm reading a lot into that, so who knows what happened there.
Alloggio apparently is the Italian word for accommodation, Tony.
Makes sense.
I did not know that.
Lodging.
Yeah, there you go. Well, so those were a couple of shocks that I had this week, CLX and ALO. But, I'm glad that we have rules, because even though it's upsetting and frustrating, you don't have to tie yourself up in knots thinking about what to do and trying to outthink the market or predict things.
Yeah. Or try and have
Sorry, you just dropped out there. What'd you say?
Oh, sorry. Well, I was saying, and the other thing that we're not getting tied up in is trying to work out what's happening based on the announcements, because they can be either scant on detail, they can be late on information, and they can be, I guess, have a particular perspective to suit the party that's making the announcement. So, yeah, without knowing what's going on with Next Capital or with Alloggio, it's difficult to know how to value the stock.
Have they put out something on the 17th of March. Did it have they put out anything to explain? Well, they did. They said they're lower than expecting trading result. Yeah, okay. They got a new announcement that came out yesterday. I see something called what's this called? An update. Consultation period extended.
Yeah.
Oh, okay. So this is Next Capital saying, yeah, we're going to think about this a little.
Yeah. This is Gojo saying, well, yeah, Logan's dead. I don't know if the company's worth as much.
I like this in this 22nd of May announcement. In bold at the end, they've written, ALO shareholders do not need to take any action at the present time. Like, yeah, well, I don't know about that. I think they do. They need to sell the shares and get out.
Well, maybe. I mean, that's pretty standard to put that onto a release like this. Yeah.
We took action. Stephen Mabb sent me a great little, what do you call this? Graphic.
Looks like a future coffee mug.
It does. Yeah. We'll steal this and do our own version of it. It's from Morgan Housel, author of The Psychology of Money, he says. And it's just a nice little graphic entitled Some Things I've Learned About Money. And I thought these were good. I'll read a few of them. The Joneses aren't as rich or as happy as you think they are. You could just put the Kynestons in there. Aren't as rich or happy as you think they are.
No, we're happy.
Yeah, okay. The Kynestons are as rich and happy as you think they are, but not the Joneses.
Funnily enough, my sister is a Jones. She married a Jones. They're pretty happy.
Rich and happy? Oh, that's good.
Yeah.
The more complicated the investment advice, the less useful it is.
Yeah,
I like that one. get rich quick and get poor quick are two sides of the same coin. So that was clever.
Yeah, that's good.
Ask about anything you don't understand. I've always lived by that rule. I think that's it's one of the things I noticed early on in my career was that the smartest, most seemingly confident people I knew were the first to admit they didn't understand something and asked for it to be explained and over, rather than fake that they understood it. They go, hold on. Like at Microsoft, people used to say, explain it to me like I'm 5, right? Which has become more of a common thing in Reddit and places like that. But explain it to me like I don't understand, because I don't. And not be afraid to say that, right? Just explain it to me, because I need to understand. I want to understand it, and I'm not embarrassed about saying that I don't understand it, right? Whereas a lot of people, I think, kind of just pretend that they understand stuff and they, fake it. Not good. A house is a place to live, not an investment. Would you agree with that, Tony?
I didn't actually, no. I think it is true a house is a place to live, but they are good investments as well.
Wonder why he says that, though. Do you understand his? Is there a framing of that where it would make sense?
I don't know, actually. I mean, people like Roger Montgomery have often said that the property market is a bit of a sham because you can't value it, although he does admit you can use the rental yield as a way to value it. But the point he's making is that most valuations are comparative valuations. So house A is for sale and it's the same size and age as house B, and house B sold last week for $1 million. Therefore, house A is worth $1 million. It doesn't there's no sort of fundamental way of from the ground up working out what house A is really worth. Although you can rent it out and get an income, and you can say that, it's worth, that's a yield I can compare to a bond or the bank or whatever, and working out what it's worth. So, yeah, I don't agree with that.
The thing that's always confused me about real estate is if I buy a house, let's say I buy a 3-bedroom house for $500,000, and then 10 years later it's worth $1 million, and I sell it for $1 million. I've made $500,000 on my investment over that 10-year period. But if I want to move into another 3-bedroom house that's equivalent, it's going to be worth $1 million. So I'm going to have to spend $1 million to buy the same kind of house. So that kind of nullifies my investment return.
Yeah, no, you're right. And that's why I think houses are really good. The other dimension to this is houses are really good to gear against, because you've got, after 10 years, you've got the extra $500,000, which you can use as equity to be able to borrow and then invest somewhere else, either in another house or the stock market or wherever, a business or whatever, or a project.
Rather than selling it and just spending that money on real estate.
Correct. Yeah.
Yeah.
But no, you're dead right. Unless you're changing the market, it's a zero-sum game.
Yeah. Or you buy something that's lesser than the thing that you just sold, or you're really smart and you buy a fixer-upper or something every time. And
so when I say change the market, you've bought something and converted it into something else. Fixed it up, taken a big block of land and made it into 2 houses or something like that. Or you've sold out of Brisbane, Sydney, and then moved to the country, for example, and moved overseas.
Yeah.
So, you change the market.
Here's another interesting one. Admire people who earn more money than you, not people who spend more money than you.
I really like the second part about that. I'm not sure I admire everyone who earns more money than me, but yes. Yeah, certainly the second part of that. But this whole idea of Instagram people driving around in Maseratis does not impress me one bit, and I certainly don't admire them.
Particularly when you find out that most of them rented those Maseratis for a day.
Correct. Yeah.
Your mortgage broker is lying to you about how much house you can afford.
Yeah, true.
Particularly if you're in America before 2008 with the the Fannie Mae and the whatever those other
Freddie Mac.
Freddie Mac.
Yeah, the mortgage broker has an incentive, is paid commission based on the size of the mortgage, so they're always going to try and shoehorn you in for something bigger. Luckily enough, in Australia, the APRA does have tests on the banks to make sure you can repay your loans when interest rates rise. But at the same time, prior to the GFC, there were a lot of people getting loans who had falsified the application process, gamed the application process. Yeah.
Yeah. I like the next one. You don't need to be a math whiz to make good money decisions. Financial success is 5% intelligence and 95% discipline.
Correct. And 0% emotion.
Yes. And like I always say to new QAV club members, like it took a lot of intelligence on your behalf to put QAV together, but I feel for those of us that leveraging your work, it doesn't take a lot of intelligence to run QAV as a process. There's a learning curve, but it doesn't take a lot of intelligence to run. It's mostly, in my experience anyway, just the discipline. It's
mechanical,
obeying the rules and following the steps and not letting emotion get involved and not trying to outthink the system.
Well, it might be a humble brag on my part, but it didn't take a whole heap of intelligence to set up QAV either. It's just learning from other people, much in the way scientists often do it. They say,
yeah, scientists are smart though, Tony.
Well, they are, but and I certainly would agree with that. But no, I mean, I didn't invent value investing. It was just, me that learned it was right for me and how to apply it to my circumstances. So yeah there's a certain amount of intelligence in that and discipline, but I think the quote's really good. It's mainly discipline.
Yeah. A raise in income shouldn't mean a raise in lifestyle.
I've always said, and probably less so these days, but when I was working, every time I got a promotion, I just got promoted into a bigger class of bills. That's what it was like. Bigger car, better car, bigger house, better school.
And it's challenging. I find that one really challenging. Like, you go, well, I'll get a nice block of brie and, I'll, go spend money on kung fu lessons. There's always a way of justifying spending money. I find it's not hard, even when you're trying not to spend money. Like it's always easy it's a slippery slope spending money.
Yeah, absolutely.
Forecasting is for the weather.
It's not even good for the weather.
No.
That's a great saying, I think.
Yeah.
That's really good. Yeah.
It's a good coffee mug one right there.
Yeah.
Fees erode performance. We've talked about that on this show many times. There is an inverse relationship between investment performance and time spent watching financial news.
Yeah, like especially watching it. I mean, especially when you go to the States and see Bloomberg and MSNBC and all those, and the shows are just so vacuous. It really is.
Who's that guy with the big red button?
Yeah, with the baseball bat, it comes out and takes a swipe at things and then hits the red button. Yeah. And
it's entertainment.
It's entertainment. Yeah, exactly. For people who don't like reality TV. No, exactly. But it just morphs into other things. There's an element of politics in it. There's an element of culture in it, all that kind of stuff. And eventually it gets down to economics. What's China doing? What's Russia doing? Like you wouldn't hear anything on Bloomberg about Elogio, even if it was an American company, right? They just don't get down into that nitty-gritty detail.
Oh, I didn't hear anything about it here either.
Yeah, well, there you go. Yeah, so that's a good one. Hey, you missed out one, which I just wanted to touch on briefly. Never reach for yield.
Yeah, I didn't understand that one. That's why I skipped it. What does that mean?
Well, it's particularly pertinent to our time period right now. And what it means is that maybe it's not as pertinent to now. Maybe it was pertinent to more last year. When interest rates are low and you can't get money from putting your money in the bank, retirees in particular, but I guess anyone can fall into this trap, can be presented with offers. Put your money with us and we'll give you 4% yield or 5% yield. Now I'm seeing lots of ads in the paper saying, we'll pay you 9% yield on a monthly basis or a quarterly basis or whatever. And it's always a trap, right? It's risk and reward. And if you start with the basic building block that a bond is giving 4% yield now, how much extra risk do you want to take to get to the number you need to live on to accept to take that risk? So I'm always reminded of Ralph Nader's documentary Unsafe at Any Speed, which was revolutionary back in the 60s when it was about I think it was the GM, one of the big car companies had a car, I think it was a Nova, I think it was a Chevy Nova, so it must have been GM, which under certain circumstances at a certain speed would get the speed wobbles, roll over, and the fuel tank would explode in a fiery crash, and kill people. And then GM, the executives at GM, did an analysis on this and worked out it was cheaper to pay out the families of the people who died in the Chevy Nova crashes than to recall the Chevy Novas and fix them. And Ralph Nader exposed this, and the documentary was called Unsafe at Any Speed, right? Because it doesn't matter how fast you drove this Nova, you took a chance it was going to get the wobbles and fall over and explode. And I feel it's the same logic that applies to yield, right? If a government bond is the riskless yield you can get, and you can get 4%, why do you take the extra risk to get 5, 6, 7, 8, 9% and invest in, a fund set up by a property developer who's promising the world? It's, to me, the grasp for extra yield is unsafe at any speed.
It's funny you should mention that, because I had in After Hours to talk about the fact that Chrissy and I rewatched Fight Club over the weekend, and there's a scene in Fight Club that talks about this. I just pulled it up on YouTube.
On a long enough timeline, the survival rate for everyone drops to 0. I was a recall coordinator. My job was to apply the formula.
Here's the info went to the windshield. 3 points.
A new car built by my company leaves somewhere traveling at 60 miles per hour. The rear differential locks up.
The teenager's braces are wrapped around the backseat ashtray. Might make a good anti-smoking ad.
The car crashes and burns with everyone trapped inside. Now, should we initiate a recall?
The father must have been you. Did you see where the fats burned to the seat? Polyester shirt. Very modern art.
Take the number of vehicles in the field, A, multiply it by the probable rate of failure, B, then multiply the result by the average out-of-court settlement, C. A times B times C equals X. If X is less than the cost of a recall, we don't do one.
Are there a lot of these kinds of accidents?
You wouldn't believe.
Which car company do you work for?
A major one.
So there you go. That's the economics of recalls.
Yeah, no, that's exactly. Well, and I apologize if it wasn't GM that I'm talking about, but I think it was the Chevy Nova that caused the problems. But yeah, I love Chuck Pahalaniuk's writing. I've read all his books. They're brilliant, and they always get into these kinds of, egregious corporate greed things, or just quirky bits of society that need exposing. You'd love another movie of his. I think it's called Choke, from memory. It's great too.
I think I've seen that years ago.
Yeah. It was about a guy who
in that one.
Could have been. It was starred Sam Rockwell.
Oh, well, I just watched a bloody Sam Rockwell film this week too. I'm going to talk about. I love Sam Rockwell.
So it's about a guy who goes into restaurants and then orders a fancy meal and then chokes. So he gets the meal for free. Yeah.
I haven't seen that. I got to see that. Oh, it's directed by Clark Gregg. Wow.
No, I don't know who he is.
Clark Gregg, have you seen any of the Marvel films, the Avengers films, or any of that kind of stuff?
Yep.
He's Agent Coulson in S.H.I.E.L.D. and the Avengers films. Yeah, he's also a director.
Right.
And he directed Chuck.
Right.
Co-wrote it with Chuck Palahniuk, and directed it. Cool. Now I watched Heist over the last week. You ever seen that? 2001 David Mamet film.
Yeah.
Gene Hackman and Sam Rockwell, Danny DeVito. It's okay. It's not great, but it was one of Gene Hackman's last films. And I was like, what the hell happened to Gene Hackman? He's in his 90s. He's like 93, retired from acting 20 years ago. And he's a rancher in Montana or somewhere now. And somebody posted a photo, like what a paparazzi posted a photo of him recently buying a shovel and all kitted out for a day of working on the farm. He looks like a man in his mid-90s, but he's still going. He's working on the farm, going strong. Been out of acting for 20 years, more or less. I think 4 or something was his last film.
Wow. I always liked Gene Hackman. He was a great actor.
Oh, me too. What a great, like, just had a certain gravity about him, you know?
Yeah, well, he was like not a physically attractive guy, but ex-Marine, so physically fit. And well, the first time I saw him, I think his first breakout role was Bonnie and Clyde, where he plays one of the gang in Bonnie and Clyde. And it was a fantastic character acting role.
Yeah, and then of course the French Connection.
Yep.
Popeye Doyle. Conversation. Great film with John Cazale. So one of John Cazale's 5 films that he made.
And how many Academy Awards did he win for those 5 films?
None. Can you name the 5?
Oh, I thought he had Godfather. 1 and 2.
Did he win? He maybe did.
I think he did.
1 and 2.
I think he has like the most Oscars per movie.
Oh, really? No,
I think so.
According to IMDb, he got 1 nomination.
Oh, okay. I'm wrong then.
Which was for Best Supporting Actor for
Godfather Part 2.
No.
Dog Day Afternoon.
Yes.
Yeah, one of my favourites. That's a great film.
Oh, it's a great film.
Yeah.
Keep going. What else was he in?
Conversation.
And?
Deer Hunter.
Yes. Like the greatest career, and then he died tragically of
cancer.
Yeah, it was something kind of cancer. It was weird, but yeah, like
with Meryl Streep at his side in the hospital.
Yeah. She took a role in The Deer Hunter just to be close to him, like a supporting role just to be close to him. Yeah, what a career! You know, 5 of the greatest films in the 70s, and he was a lead actor in all of them. Wow, and a great actor. There's a great documentary that came out about him a couple of years ago. I don't know if you saw that.
No.
Pacino and everyone talking about him, just how he was the best. Like all of these guys that worked with him, directors and actors, just thought he was the best actor of his generation. Pacino, De Niro, all these guys were like, yeah, John was the man. Like he was just, the best. Lung cancer. Wow. He died of
lung cancer. Yeah, right.
Wow. Anyway.
Anyway, back to investing.
We've slid into after hours early.
We might have to get Dennis to rearrange the edit on this episode.
Sorry about that, folks. Just got distracted by Fight Club. Okay, so never reach for yield means don't take more risk to get yield. Right. Okay.
Yeah,
makes sense. Your life is a better benchmark than the S&P 500. You'd agree with that.
Absolutely. And Buffett's always coming out and saying, the most important thing is my family. The most important thing is loving and is to be loved and to love. He doesn't say the most important thing is to go out and, take a big risk or be a big corporate player or whatever. Yeah.
Just like Logan Roy. It's all about love. Don't pay interest to acquire something that loses value. What would be some examples of that, Tony?
Leasing a car or a boat, or borrowing to buy a depreciating asset, whatever it is, boat, car, motorbike.
Yeah. You don't have to be rich to invest, but you have to invest to be rich. There's a coffee mug.
I just have to unpack that one for a minute. You don't have to be rich to invest. True. Yes, you do have to invest to be rich. Correct.
Compound interest is the 8th wonder of the world. Set yourself up to benefit from it rather than battle against it. Yeah, that's true. A penny saved is more than a penny earned.
Yeah, I didn't get that one.
I figure because you pay tax when you earn a penny, and then you're left with 2/3 of a penny.
Okay.
In our case, or half.
Yeah.
I don't know.
I'm not sure about
that. That was my interpretation of it.
Okay.
Invest in your mind and your skills first. That's what QAV is all about. Investing in your skills. Become a skilled investor.
Yeah, and again, Munger and Buffett both continuously say, I'm still learning. Both voracious readers.
infrequent splurges bring the greatest happiness.
Does that mean that frequent splurges bring even greater happiness?
No, I think that's his point.
Uh,
What was your last splurge? Hey, how's your golf caddy going
trip to the US. I used it for the first time last week. Thank you.
Does it
Thank
work?
you to all my friends for my 60th birthday present. Yeah, it worked well.
It's like a robot.
It's a remote control golf buggy that has a battery on it, and I can. It was like walking a dog, right? I sent a video to Ruddy saying, come on, boy. I was walking along the golf course. Oh, you found the ball. Well done. Good boy.
Yeah. And my interpretation, like, if golf isn't a lazy enough sport already,
I know.
You can now have a robot caddy.
Yeah, no, it's good though. Makes it easier, which is probably against the
that's good. Yeah, you need it to be easier. Yeah, golf is so stressful. Driving around in your little cart.
I don't drive around. I do driving around the car. I've got one down at Cape Schanck, but not usually.
If you're excited about an investment, it's probably a bad idea. That one really resonated with me as well.
Yeah, well, based on your story about hot copper last week, yeah.
That was to support a mate, really, but yeah. No, like, that's the thing I always say about QAV. It's just boring. We invest in boring companies that just make money. They're not sexy. They're not flashy. You won't read about most of them in the front page of the paper, if at all. You won't see them talked about on the TV because they're just boring. They just make money.
Yeah, I'd much rather get excited after the investment works out. Like going in, generally, like you're full of trepidation and fear and what's going on, and there's blood on the streets, and should I be buying now or locking my money up? And it's they're usually the best investments. So you don't. I've been excited once, I think, in my investing career, and that was after the GFC, the first reporting period after the GFC. And I saw all these companies, wonderful companies, reporting great results, and it was being ignored by the market. And I just went, wow, this is fantastic. I got excited then, but that's the only time.
And the last one, I think, market corrections come more regularly than birthdays. Expect them.
That's a good way to frame that, isn't it?
It is. And, you've always said, it's just business as usual, man.
Yeah.
This is normal.
It is. Yeah. There's, for a start, we've said it's almost impossible to work out the right value for a company. So, it's going to oscillate within a range. And then you've got, on top of that, you've got Mr. Manic Depressive. We're trying to work out the price using the wisdom of crowds. It's always going to be volatile.
Chrissy said to me a while ago, like a couple of months ago, I said, something. She said, what have you been up to? And I go, crazy day, market crashed. She's like, you always say the market crashed. Like, you never have anything good to say. It's always just, it crashed, it's down. I go, well, when it's not crashing, I don't have anything to tell you. Like, it's like, I never talked to her about investing or QAV, at that level. She's like, how's Tony? I go, yeah, Tony's great. How's Alex? How's Jenny? But not, what's happening with investing. That's never a conversation.
Right.
But the only times is when, I'm looking a little bit harried, and she goes, what's going on? And I go, the market crashed. So from her perspective, it's just always crashing. And the last couple of years, it has had fair share of bad days, bad weeks.
Yeah. Yeah. That was a great list of aphorisms.
Thank you to, Chairman Mab for sending that through. Very good.
Very good.
Have you read this Psychology of Money book?
I haven't, no.
Steve's talked to me about it a couple of times. I keep meaning to go. I think I've bought it at some point. It's sitting in my list of things to read when I finally get through the Dark Forest trilogy. Talk about that later on after us. But my last point for today is I'm making some progress on Stockopedia. I think we mentioned a while back that Elio D'Amato is now running Stockopedia, formerly of Stock Doctor. He reached out to us. and I'm interested in it because it also has US stocks. Doesn't have a lot of stuff that Stock Doctor has, but does have US stocks, which Tim Lincoln told us a few weeks ago they're going to have at some point too now. But I have been making some progress in building a filter for that we can test.
Okay.
My lack of Excel skills is what's slowing me down, and I've been using GPT to try and fight my way through it. I might have to reach out to Gary or somebody to help me with some of these things, or Chris or Brett or somebody. But anyway, yeah, I'm hoping in the next week or so I'll have that up and running, and I can do some comparative buy lists using Stockopedia, and see if the missing bits matter. Like there's a few things. They don't track equity, they don't track ADT, but they do track volume. So I've done a little calculation to work out the ADT, combining the volume and the share price. And a few other things that they don't have. They don't have the proprietary Stock Doctor stuff, obviously, but they have equivalents of that, stock rank and quality rank, their own metrics that we'll have to work out calculations. But yeah, we might have have an option there for people who don't want to use Stock Doctor for whatever reason. I don't know what their pricing's like comparatively. I think they're a bit cheaper.
Yeah, I think they were when I had a look at it. Yeah.
But it's also going to help us, start to, if we can get it working for Australia, play with the US and, start to build some models around the US
Cool
market. What do you have to talk about, TK, before we get into the questions?
Oh, I just did the pulled pork. That's all I have to talk about today.
This is a request.
It was a request. It was a request
for your sneaky stock.
Yes, the one that Alex Hay pitched to me, which I bought a very small portion of, which I do to keep Alex happy and getting commissions.
And fortunately for all of us, it's not a QAV stock. It wouldn't pass QAV muster, so we're not going to have to sell it a week from now after you do a pulled pork.
Yeah, well, I've delayed doing this for as long as I can because I own it. Right? So,
yeah, you own it, but
it's like
we don't own it.
You should stand behind me with a sword and lop it off in case I get the pulled pork wrong and the stock doesn't go down.
What happened to QBE after you talked about it last week?
It went down.
No, it's had a good week.
Has it? Okay.
Yeah. It was trading at 1460 last week. It's now 1490. So there you go.
Excellent.
Don't have to worry about FHE. Yeah.
Just wait. Well, most of our listeners won't have to worry about it because it's not a QAV stock. And I do know that we do have a listener who's involved with the company. So apologies in advance if I get something wrong because I started to do... I got a lot of information about this company from my stockbroker over the time I've held the stock, and it's, largely in one ear and out the other in reality, because I know nothing about hydrogen or green hydrogen or any of this stock. And the history of it, I think the reason why Alex Hay brought it to me was I did own an energy company stock, which would have had QAV characteristics kind of a while ago, so probably 10 years ago now. And it was called, I think from memory, Pacific Energy. And it was a small power company in WA that was, I think from memory, in the iron ore fields and had carved out a bit of a niche for itself, providing cheaper energy to the mines, and was eventually bought out and was a good investment for me. So he said, I've got the new Pacific Energy for you. Have a look. This is a completely different type of company because it's pioneering green hydrogen in Australia, but it is a small energy company in WA with hopes to, I guess, supply some big industrial companies and perhaps mining ones. Company's called Frontier Energy. The stock ticker code is FHE. It's a small cap. ADT's only 44,000 a month. So it's not the kind I would normally invest in. It's not on our buy list. It's not even in the download that we download from Stock Doctor into our spreadsheet. So I had to do a bit of a manual workaround to even get a QAV score or QAV-like score for it. Bit of background. So this is, I guess, might be of interest to people who have approached us and said, I want to invest in something which is green and alternative to coal and oil and It's going to be good for my grandkids going forward, etc. So take a look at this one. But I hasten to add, it's a startup. It doesn't make any money at the moment, so we're not going to be able to buy it in the normal manner that we do for QAV stocks. I did do a bit of research into what hydrogen as a fuel is, and I'm still, very a very big newbie in this space. So again, apologies if I get something wrong. But basically, hydrogen is used in fuel cells, which have been around for a long time. The idea of combining a fuel with oxygen, so storing the fuel, combining it with oxygen during a chemical process, and then producing energy has been around for a long time. And NASA's used it to power space stations. They've been in use for a long time. I guess it's a different form of battery. The batteries that we know are a chemical reaction, but the fuel's stored and then used. And I think this is a bit different. A fuel cell we're talking about here, a hydrogen fuel cell, is basically the hydrogen stored and then mixed with oxygen to form a chemical reaction to produce the energy. And that's about as much as I know about it. But it's interesting that these old technologies are being re-looked at. There's two ways of creating or using hydrogen as a fuel. One which is the most common at the moment is called steam reforming, which is to take something like natural gas and water and then separate the hydrogen from the carbon. Natural gas is a hydrocarbon, and the resulting and producing hydrogen during that separation process. The problem is the resulting carbon is released into the atmosphere. And so that kind of hydrogen fuel is called grey hydrogen. There's another type of hydrogen fuel called blue hydrogen, which is when the carbon that's released by separating hydrogen from natural gas is captured and stored, and that's called blue hydrogen. But then green hydrogen splits water into the H2O molecule into hydrogen and oxygen using electrolysis. And if the electricity to do that is provided by a source of green power, then it's known as green hydrogen. And so the electrolysis, I guess, chemistry or process is the reverse of the fuel cell. So they basically use electricity to split the water molecule into hydrogen and oxygen, and then store the hydrogen, and then use it in a fuel cell process to add oxygen, and then create the energy that powers the vehicle. So again, interesting take on things. One of the issues with the green hydrogen process is that it's currently costly. So it's generally around $4 to $5 a kilogram of hydrogen to run this process. And economists are saying the tipping point for the wide take-up of green hydrogen is thought to be around $2 per kilogram. So there's a ways to go. And FHE is saying that in their stage 1 project, which is the one that's currently under development or up and running, in fact, I think now, they're able to produce hydrogen at $2.77 a kilogram. So they're getting pretty close to that sort of economies that are required to make the hydrogen fuel cell and to use hydrogen to replace natural gas as being economical and compelling on its own basis from an economic point of view, and not just on the basis of climate change. So it's exciting times. It's an interesting project. The other dimension to all of this, of course, is that governments are now throwing money at hydrogen as a potential replacement for diesel fuel in particular, and potentially other types of fuel as well, and natural gas for heating. So there's the IRA in the US, the Inflation Reduction Act, which is, I'm just looking up the number now, I think it's throwing hundreds of billions of dollars at these kinds of projects. But what it is doing is it's giving a $3 per kilogram tax credit to hydrogen producers. So they are trying to get hydrogen up and running as both a good thing from a climate change point of view, but also an economic thing from the end users of the energy produced through this process. And that's happening all around the world. Even in Australia, the government here has announced a $2 billion hydrogen fund to invest in this process. And one of their objectives is to take an area like the Hunter Valley, which now produces lots of coal, and turn it into a green hydrogen hub, and continue to provide employment to people, and Australia to be self-reliant on its fuel, as it is now with coal. So all this is going on, and this company is, I guess, at the forefront of all this, and is, if not up and running, very close to being up and running in this space. So I kind of learned a lot about green hydrogen when I was researching this. It's very interesting. This particular company is also taking advantage of the fact that it's in WA, and it's situated halfway between Kwinana, which is south of Perth, and Bunbury. And if you look it up on a map, there's a couple of aluminium smelters in that area and a couple of diesel plants, and there's a few mines nearby. It's a very heavy industrial area. So what Frontier Energy have been able to do is to get offtake agreements to get water supply from the diesel plants at a reasonable price. They're getting access to the natural gas pipelines. And one of the things I didn't mention was that hydrogen can be transported without too much modification through the natural gas pipeline process. So it is seen as being a potential replacement for people who have gas in their homes. It could eventually one day be hydrogen, and therefore not a hydrocarbon that's being burnt. It's hydrogen instead. So they've got a couple of, I guess, infrastructure benefits from being located where they are. Not to mention that when they do get up and running to producing power, they can then, there's plenty of industrial customers around there that can take advantage of, to sell the power into. And I guess the last sort of trick to their location is that being in a very heavy industrial area there's no shortage of people to help them build their plant. There's lots of supply of contractors and workers to build this plant. Plant's in two stages. One is they're building or if they haven't already, I'm unsure as to what stage this project is at, whether it's actually completed or near completion. So forgive me for not getting the tenses right in what I'm saying, but they're building or have built a large solar array farm, and that's going to provide the green electricity to be able to feed the electrolysis process to split the oxygen from the hydrogen in the water, and then store the hydrogen and allow it to be used as a fuel or put into fuel cells and power electricity. And one of the things that they hope to do is to feed hydrogen into what's called peaking power plants. So it's currently what state governments use now with large batteries, or in New South Wales' case, they're building a pumped hydro facility to store energy to be able to reuse it when there's peak demand in the energy grid. And the hydrogen is a good storer of energy. You just put it in a big tank, and then as you need to power this power plant, you run the hydrogen fuel cell process, and you can run the power plant to service peak demand and then turn it off again. It's not like some of the big power plants need to run all the time and have a baseload need to keep going, but peaking plants don't. So that's one of the uses for this the energy produced by the green hydrogen. So that's all, I guess, background for this. I mean, I guess there are plenty of risks in an investment like this. It doesn't make any money at the moment. So whatever equity they have on their balance sheet has been raised as, I guess, capital from shareholders. I haven't delved into it in a big way, but there's probably also some government grants in there as well. So this is a punt. It's a startup like any other startup. And given the environment, given the fact that they structured it well and where they've situated things, it's got a reasonable chance of success. And I guess just like to Alex Hayes' point, like Pacific Energy, it's also got a reasonable chance of being bought out at some stage. It's currently a small player. And if someone like, just to name a name, Twiggy Forrest comes along and says, hey, I'm into green hydrogen, you guys are doing well, I'll make you an offer. So it's a potential takeover play at some stage if it's successful. So, but all these things have risks. Hydrogen is one of many clean energy startups, and if it comes to pass for whatever reason that solar or wind or pumped hydro or something new that comes along is even more economical than green hydrogen, then this technology becomes superseded as well. But without knowing the future, it's got a good chance of delivering on what it's promising. So that's the background to it. The numbers, and this is a difficult thing for me to do, because I can't really give it a QAV score. I did run a QAV score for it and come out as negative 0.02. So it doesn't score well for us. And the big reason is because it doesn't have any operating cash flow, because they're still building things. So it's difficult to score from our point of view. It's got, hasn't made any money, so therefore negative earnings per share, negative ROE, negative PE, doesn't have a yield. There is some equity, as I said, they've raised capital, but it's about 9 cents per share when the shares are trading at 44.5 cents. So we're not going to buy it based on the fact that we can buy it at book value. What else can I say? The Stock Doctor Financial Health is saying it's marginal, which makes sense because it's not producing any cash, and steady. So it actually gets a point for being steady. Steadily marginal isn't a great thing, but it's I guess a quirk in our system that we give it a point. Directors do own, I think they're a lot, they're almost 10%, so may as well give them a score for that. The stockbrokers have put a consensus target price on this, and the price is less than that, so it does score for that. So in our QAV scoring process, it does score 6 out of 11 items for 55% on a quality basis, but without any operating cash flow, it doesn't get above 0 from a QAV score point of view.
Right. Well, that's FHE. I got a little bit of an education on green hydrogen there. I appreciate that.
Yeah, so did I. It's very interesting. But again, it's all new, and they may do well, or they may become part of history and get swept up in something else. Yeah.
Well, speaking of which, we have no questions this week. We had 500 of them last week. None this week. That's how it goes. So we can skip into after hours. And one of the things I did want to mention at some point during this is, yes, no doubt you've seen this week, the federal government has decided that they're going to regulate buy now, pay later stocks. That's finally happened.
I did see that. And so it should. It's credit, in my opinion. It's always been credit.
And you've been saying that for the entire time we've been doing this show. So much so that people told us to shut up about it a while ago. According to the Financial Review yesterday, the 22nd of May, new regulations will throttle buy now, pay later. Buy now, pay later providers will be forced to use broader data sets to determine and explain why their loans are suitable for customers under new responsible lending checks. Tougher requirements for credit checking could force Afterpay to invest to update the systems used to admit new customers. The new rules that will prevent automatic credit limit increases are also likely to throttle industry volumes, according to stockbroker Shaw and Partners. The government will regulate BNPL as a credit product, Financial Services Minister Stephen Jones said on Monday. And I bring this up because it's taken them a long time to get to this point. It's so long that Afterpay is not even a stock on the ASX anymore after it got acquired by Square. But you were saying a few years ago when we were talking about these BNPL stocks that with these startups, there's a lot of opportunity, there's a lot of potential upside, but it's a gamble for a whole bunch of reasons. And one of those that you kind of predicted might happen was the government would step in and regulate, which is going to substantially, you would think, curb the revenue opportunities they have. So all of their valuations were based on this unlimited money tree that was going to flow down to them. And, we always said that once they got regulated, the unlimited money tree potential was going to lessen somewhat, which certainly seems to be the case.
Yeah, well, I think there is still a listing for Afterpay of a sorts on the ASX because it's called Square is now called Block. This is like the Monty Python sketch about the bands breaking up and renaming and reforming. So Afterpay has been taken over by Square, and now it's called Block. So it's listed on the ASX. It's down a lot, it's kind of 50% from where it was, I think, when Afterpay was taken over. It has. I just noticed today it's recovered, so people have maybe seen this coming and sold it off, and now thinking, it's not too bad, I can live with it, and they're buying back in. But yeah, it's down a lot since Afterpay was taken over. I think that it has a listing on the ASX because the Afterpay shareholders who took the bid could still have a local listing for their shares.
So it's SQ2.
It is.
I
Yep.
think the code, yeah. So you go back August 2022, SQ2 was trading at $126 a share. It's currently trading at $91 a share. That's a bit of a drop. Even going back to February this year, is trading at $121 a share. Now trading at $90.
And that's another interesting sort of sidebar to this conversation was that just recently somewhere, it may have been on an email I received, it talked about, the headline was, fund manager who identified Afterpay to buy at $6 has this new stock tip for you. And it's like, no disrespect to this guy, they could be a genius. But that's like saying, Cameron Riley, the guy who identified Fortescue Metal at $7, has this stock tip for you. I mean, you've had hundreds of investments since then.
What's wrong with that?
Some have been bad. Well, it's just such a misrepresentation of reality that it's just clickbait, really.
Yeah.
Zip. I thought it was funny.
It is. The other big BNPL player in the market, trading at $1.52 in July of last year, currently trading at 55 cents.
Oof.
And that's not directly related to the regulation. Obviously, there's been the interest rates and all those other issues that you also predicted would kick in to these shares. But again, these was all to the moon investments in Australia. The FANG and the WAX stocks, the FANG stocks crumbled too. I see BuzzFeed as just declared bankruptcy in the US today.
Okay.
And Vice is shutting down as well. A lot of these big media companies are collapsing as well. Apparently, it's a lot harder to make money out of digital news than they anticipated.
Well, having said all that, I think some of the best performing stocks in the US have been the FANG stocks recently. At least Microsoft and Amazon. And I read on the weekend in Alan Kohler's email that he was putting it down to the AI effect, that the companies who were using AI well were doing well. And if you back them out of the S&P 500, the S&P 500 looked pretty miserable without them.
Well, I think, I'm not sure how Google's going to fare out of the whole thing. You would think that AI is a huge threat to Google's search revenues. You're not going to search for things the way that you used to search for things now in a world of GPT. The way I always explain it to people is I search in Google now for maybe products. You tend to search Google, use Google for information, use GPT for answers, even though, yes, we know the answers aren't always correct, but neither is Google. I mean, you search for stuff in Google, you can spend hours wading through nonsense, right? But they make all their money, or most of their money anyway, a large chunk of their money from search revenue. But I think that's under threat. But anyway, the share price is doing okay. So obviously, what the hell do I know? Investors.
Well, don't they have their own version of ChatGPT? If they haven't launched it, they're going to.
Well, they do. Bard. Bard is out, and I've played with it. It's not great. Doesn't compare well to GPT. But again, it's difficult to see how you have advertising revenue in Bard.
Right.
I mean, if you ask, an AI for an answer to a question, is it going to give you an ad? before it answers your question every time. They're conversational experiences, these generational AI tools.
Well, I'm sure Google can ask Bard how to monetize chat GPT AIs.
Sure it can. So what have you been up to in the last week, Tony? What have you watched, seen, listened to, played?
Yeah, not a whole lot. I'm sitting here with a trophy over my right shoulder. Yeah, I got the trophy from the last cast win for our Group 2 in Adelaide, which was pretty exciting.
Congratulations.
Nice trophy there. Yeah, thank you. Not a lot. It was the US PGA golf tournament over the weekend, which I found riveting because it was really tough and the pros all struggled. So I'd much rather watch golf played at the highest level when it's difficult than, watching them just tear up a course and hit the ball 350 yards and then chip and putt. So that was fun. I enjoyed that. And
who is this Brooks Koepka?
Brooks Koepka.
Koepka. Who's he? What's he do? Where's he from?
Interesting dude. Won the US PGA on the weekend, and that's his 5th major, which puts him in the top 18. So, definitely the top 20 players of all time. And he's a interesting dude. He only ever sort of does well during majors. He's not a great winner of tournaments outside of majors, but he's won 5 of them. He went across to Live Golf, so there was a lot of controversy about the Live Golfers even playing in the US PGA, but the US PGA is run by a different association to the touring PGA. And that was the other dimension to the story, which was great fun. So the US PGA is run by all the golf pros at the golf courses, someone you go and take lessons from, or somebody who runs the pro shop at a golf course. And so they're allowed, I think might be 20 slots in the tournament, and they go through qualifying to take part in the field. And they normally get trounced and don't make the cut. But one of them snuck through and was in contention, a guy called Michael Block. And he had a hole-in-one on Sunday, and the crowd just went bonkers. He's become a bit of a cult celebrity in the golfing world, and he's been very humble about it and done lots of great interviews. He's now being invited to play on the PGA Tour next week and in the Canadian Open and a few other events. And he's qualified to play next year in the US PGA Major as well. So it's a great success story for him. He's 46, I think, or 48 or something. So he's quite old.
And Live Golf, you mentioned, is Greg Norman's
breakaway tour, funded by the Saudi investment fund. And it's been taking on the PGA. Norman's always been trying to revolutionise golf, and has always been he's always been critical of the US PGA, even though he's made a lot of money on the PGA Tour. And perversely, by setting up Live Golf, the PGA Tour players are getting paid more. The PGA Tour could suddenly find some more money to pay them to try and keep them playing in the PGA rather than going across to Live, because the Saudi investment fund has paid hundreds of millions of dollars for golfers to sign up with them and transfer across, including Cameron Smith, one of the Australian golfers from Brisbane. Got paid, I think, $110 million to transfer across after winning the British Open last year. So there's been a lot of newspaper ink expended on why Live is bad and why the PGA is good in the main. But yeah, it's been interesting. And then because the PGA Major was being run by the course professionals and not the US PGA Tour, they have a set of rules on who can play, who qualifies for these events. And because Brooks Koepka had won a PGA in the past, he was invited to play. And he won it, even though he was a Live golfer. So there was a bit of an uncomfortable dimension to things with that.
Do you know why it's called Live Golf?
I do. It's Roman numerals for 54, and they only play 54 holes. So one of the selling points to the pros was, you're playing every week. It's way too much. You're not getting paid enough. Come across to Live. You'll get paid more and work less. So they play 3-day tournaments, not 4 days, and they play roughly once a month rather than every week.
It's clever. I like it.
Yeah.
Good stuff. So apart from PGA, what else has been on your radar?
No, not much. I finished off The Millionaire's Factory, which was a good read. Interesting
Yeah.
book if anyone's interested in, a good company to look at, and also a bit of Australian history, I suppose, in there as well. Lots of references to the last sort of 30 or 40 years of Australian history in there as well. And just started reading Sam Neill's book, Did I Ever Tell You This? Which is a memoir, which is good fun.
Yeah.
Yeah.
He's had an interesting career.
He has, yeah. And, one of those ones which just happened by happenstance. He didn't set out to be an actor. Yeah.
Really? Wow.
Yeah, I think he started off. He did sort of start off in the industry, but I think he was a lighting person or a sound person originally. Yeah.
Oh, really? Wow. Well, and you've been watching Succession? You haven't?
Yes.
You're not completely up to date, but almost up to date.
I am, and loving it. I think it's probably the best season yet. It's fantastic.
It's crazy, right? The writing is so good.
Yeah.
Well, we had our Kung Fu grading. As you know, we talked about that off air earlier on Friday night, which we passed, but it was brutal. And I had anxiety dreams for 3 or 4 nights leading up to it.
Really?
I said to Chrissy, I normally don't have anxiety at all, let alone anxiety dreams. And I was like, I've had these weird, nonsensical anxiety dreams, like the old thing you have about turning up late to your high school exam and realizing you haven't been to class all year, that kind of stuff.
Yeah.
They weren't exactly that, but they're that kind of thing. And I was trying to figure out why. And then I realized I had this grading coming up and I must have been sort of nervous about it at some level. Anyway, it was brutal. Went for about 90 minutes. There was sparring involved. I got punched in the nose quite hard towards the end when I was just wiped out and exhausted. But it was a good feeling. It's sort of we're sort of midway. We go into the brown belts next after this, so we're only I think 3 gradings away from a black belt grading now. So we're sort of in the advanced classes for our school, and kind of feels weird because it feels like we just started yesterday and now we're in the advanced classes, and we've worked really hard and we love. No, not crushing it. No, we still feel hopeless, like beginners in the whole thing. But it's been fun and we really enjoy it. And as I said to you off air, it's the first time in my adult life where I've actually enjoyed exercise and pushing my body and looking forward to it every day, going out and hurting myself and getting hurt and pushing my body. It's a new experience for me. And I'm loving it. It's great. I'm really glad that I found, and it's great too that Chrissy does it and Fox does it, and we all love it equally.
And is Chrissy the same grade as you?
Yes. Yeah,
and
yeah.
Is there like a handicap system, or could she take you out in a fight?
No, there's no handicap system, and
well done to her.
Oh yeah, she's great. She's really, I mean, probably the most enjoyment I get out of Kung Fu is just watching Chrissy evolve. When she will say herself, when we started, not even 2 years ago, she didn't know how to make a fist. She was making a fist with her thumb on the outside of her fingers for the first few months, and she had to keep getting told by the seafood. No, sorry, inside of her fingers.
I was going to say,
yeah. No, inside.
It should be outside.
I can't even do it. I have to think about it. Yeah, she was doing it inside.
Yeah.
And our teachers kept saying, you're going to break your thumb if you do that. You got to. So she didn't even know how to do that. And now she's a complete machine. She's a monster. And Hunter and Taylor came along to watch the grading, and it was the first time they'd been to any of our Kung Fu. And they were like, holy shit, Chrissy looks fierce out there. And she is. She's really good. So that's good. And it's great to watch Fox get better as well. He's doing great. He walks around school sort of doing Kung Fu moves. He's just always thinking about stuff. So anyway, that's fun.
That's great. Well done.
Yeah, Succession's great. I watched Heist, which was fun. Not the greatest film, but it was a good fun. David Mamet, I'm a big fan of. Glengarry Glen Ross, one of my all-time favorite films. And he's done a lot of other good films as well. But he wrote and directed this one. I'd say probably better writer than he is a director. But it was worth it just for, a good Gene Hackman film late in his career. Watched Fight Club again, as we said. Hadn't seen that for a while, and damn, that holds up well. Have you seen that recently?
Probably in the last 5 years, and I loved it again. It's still great.
Even though it's one of those things that even though you know the twist, you get more out of it because you see the hints along the way that you didn't pick up the first time around.
Yes.
And
it's great. Great film.
All of the performances are great. Brad Pitt just knocks it out the park. As Chrissy said, whoever his costume designer was for that just knocked it out the park. He just looks so fucking cool through the whole thing. Helena Bonham Carter looks fantastic. I tell you a creepy thing I worked out though. Did you watch Wednesday, the Netflix series?
I watched the first episode, and that's as far as I got.
Right. It's okay. It's not great. A little fun. But I realized watching this that the girl, I can't remember the actress's name, who plays Wednesday, she's basically made to be a younger version of Helena Bonham Carter, particularly in the Fight Club. She's got the same sort of gothy makeup and attitude as Helena Bonham Carter had in Fight Club 25 years ago. Then you realize that when Fight Club was made, Helena Bonham Carter was married to Tim Burton, and Tim Burton created and directed Wednesday and made the lead actress basically a younger version of his ex-wife. Go, ooh, that's either weird or really cool. I'm not sure.
A homage. Anyway, it was a homage, maybe.
An homage, yes. I also started watching last night Barbarella, which I haven't seen for 20 years, and I'm only halfway through it, but I'm really enjoying just the campiness of it.
The orgasmatron and the spacesuit disrobing scene.
Yeah, and you just realize how much Austin Powers ripped off of Barbarella. Like even that opening sequence when she's disrobing and the graphic titles are bouncing around her naughty bits and selectively hiding bits of her naked body, like, Fox's noisy and got a kid here. Anyway, that's a lot of fun. I'm enjoying that. Roger Vadim did a great job casting his then wife as Barbarella. Reading, I'm sort of getting to the end of Death's End. So I wanted to talk to you about the Dark Forest hypothesis.
Yep.
Which I had never heard of before I read this trilogy.
Same.
I'm very familiar with can't remember the name of it now. What's it an answer to? The Manhattan Project physicist.
Oppenheimer?
No.
Oh, the Fermi paradox.
The Fermi paradox, yes.
Yeah, right, yeah.
Very familiar with the Fermi paradox for decades, thought about it a lot. It's what convinced me that intelligent life probably doesn't exist in the universe because there's this great silence. Yeah. If they exist, where are they? Why?
We've had this conversation. I told you where they are.
Where are they?
They're in this table. They're in this microphone. They're in.
Why haven't they made contact?
They don't need to because they've been transferred into energy, transmitted across the universe, and then inserted into the matter that's all
inserted into the matter.
Yeah, it's part of the Singularity is Near, or the sequel to the Singularity is Near. That
they've uploaded.
But the best storage is actually matter, right?
Yeah.
So
right.
Yeah, so they've uploaded and they're being stored in all the matter that we can see. They're talking to themselves on their version of online. They don't give a shit about us. We're just they're probably inside me right now as well.
That explains a lot. QAV was made by aliens, intelligent aliens. That's where we start the cult.
Like Men in Black, Elvis has gone back to Jupiter.
It's L. Ron Hubbard. This is a Scientology thing. He went to a new level. Well, it's the same thing though. Either they wipe themselves out and they don't exist, or the timelines are just too vast for us to coexist. Or if they have uploaded and they don't have any interest in making contact with us, for all intents and purposes, as far as we're concerned, they may as well not exist. I mean, we have no opportunity for. They're not landing in flying saucers in Omaha and anally probing people, right? They've gone on to a different.
They might do that for shits and giggles every now and then.
That's what I'd be doing. I was an intelligent species.
Especially because you've been uploaded, you're living forever, right? You've got to do something to pass the time.
Exactly. So for those people who haven't read this the Three Body Problem books, they introduced me to this idea of the dark forest hypothesis, which basically says that the universe is like a dark forest. Every intelligent species is trying to stay as silent and as quiet and as dark as possible, because if a more advanced civilization out there discovers a less advanced civilization, but which is advanced enough to be broadcasting messages out to the universe, it's in their best interests to wipe that civilization out quickly, because it may become more advanced than them, and they may be hostile in the future. You have no way of knowing if they're going to be hostile or not, even if you are a pacifist civilization yourself, the more advanced one, and the less advanced one, even if it were, unlike humans, a pacifist civilization, you don't know what's going to happen down the track. So, you know, it's sort of like the prisoner's dilemma. You might as well wipe them out now and save yourself the problem of having to deal with them later on. And so I found that fascinating. I'd never considered that. Really
very profound. Very profound. And I remember after reading it, just thinking, oh my God, can we go out into space and pull back Voyager 1 and Voyager 2? We are dead in the water.
Yeah.
Because you think about the logic, it's like, you know, it's just so human-centric to say, we're going to go out and tell people we're here because we're naturally smarter and better than they are. It's like, no, anybody that can see us coming is probably going to be far smarter and, you know, and more intelligent than we are, and therefore capable of wiping us out. So why are we even opening the door? Just stay silent.
Yeah. I mean, up until reading these books, I'd always assumed that there was a handful of scenarios if we did encounter another intelligent civilization. Like if they're more advanced than us, and they probably are going to be if they're receiving our messages, they might wipe us out, or they might come and help us, or they might just completely ignore us. The three main scenarios. But having read these books now, the logic just kind of makes sense. That why would they invite competition from a potentially hostile competitor?
It's like, as you said, like when Telstra discovered a startup in the .com era, they bought them and shut them down. Yeah.
Kill the baby in the crib was Telstra's term for it. Yeah, exactly. It's the kill the baby in the crib hypothesis or strategy. Yeah.
Yeah, and like if someone's advanced enough to travel through the vast amount of space they have to travel to get here, they're probably going to be more advanced than we are. And we're toast. Yeah.
Yeah. And then it plays out in the book I think in book 2, when one of the alien civilization that the humans make contact with wipes out most of the human fleet that the humans are so proud of and think is going to devastate this alien civilization, wipes out 99% of the ships in 20 minutes. And a couple of the surviving ships take off out of the solar system. And then quite quickly they realize it's going to take them about 60,000 years to get to the nearest star system. And they don't have enough fuel and food really to get there. And they figure the Earth is probably gone for all intents and purposes. It's going to be wiped out when the alien fleet arrives. And then they start thinking, well, the other ships that have survived with the human race on it, are they going to wipe us out to take our fuel and food? And if they are going to wipe us out to take their fuel and food, should we wipe them out first and take their fuel and food, or at least stop them from wiping us out? And then it turns out the other ships had already come to the same conclusion and they all wipe each other out. So even the humans, quite quickly reached the conclusion that it made more sense to be the aggressor rather than wait to be destroyed, by humans, let alone Aliens. It's very, very dark. Very dark.
Have you finished the third book yet?
No, I'm towards the end of it.
Oh my God, it's just such a great ending.
Yeah, I'm sure it's depressing. Speaking of depressing, Ray Stevenson died last night. Were you a fan of his?
Oh, now remind me, the name rings a bell. It's 70s. What did he
No,
sing?
he was only 58.
got
Most
the wrong
famously
guy.
played
Sorry.
Titus Pullo in HBO's Rome series. Did you ever watch that?
No.
Oh, it was okay. I won't say I'm not the hugest fan of it because being a fan of ancient Rome, some of it bugged me. But he played one of the main roles. He was a centurion, hard drinking, hard living, wise. He's an Irish actor, but hard drinking, hard living, wise cracking, disrespectful to his superiors, centurion. Bit like remember in the old Three Musketeers films, there was one of the Three Musketeers that was the big hulking guy.
Yeah, right. Oliver Reed character.
Yes, that kind of a vibe to him. Like a modern Oliver Reed, actually.
Yeah,
I hadn't pegged that before, but that's it. He was also in the Thor films, and he was in, did you watch Triple R, the Indian Bollywood blockbuster?
No.
Oh my God. That was only came out like last year.
Mm-hmm.
It was great. I mean, if you want a great night, watch Triple R. It's the craziest Bollywood film. Hunter recommended it to us, and we watched it. And Chrissy and I both just loved it. It's completely over the top about a couple of real historical Indian revolutionaries fighting the British Raj, and Ray Stevenson in this plays like this, British governor, I think, of this region, and he's a horrible racist, typical British Raj guy. But it's over the top, like completely over the top, with crazy superhero stunts and dance numbers.
Right.
And it's funny. It's seriously one of the best films I've seen.
Okay.
Anyway, he was one of these actors I always think of, like Nicolas Cage, who just brought something to everything. Doesn't matter how bad the film was. He just had a twinkle in his eye and a bit of a, je ne sais quoi that made everything.
He was a movie star.
Better. Yeah, he was. Good looking guy, just a real sort of, anyway, he died. That was sad.
No, that's a sad. I don't know him, but I love those kind of actors. I mean, I grew up on Oliver Reed and Keith Moon and Richard Harris, Peter O'Toole, those guys on Parkinson and being interviewed and telling outrageous stories. And it was just so. It was like it was on a different planet, from where I was growing up on. It was just amazing. Loved them. Just loved the stories.
Brisbane.
Yeah. I love. I even saw it. Like they still pop up on my feed every now and then. There was an interview with Keith Moon, and he's like, when he's interviewed, sometimes he can have this very posh sort of English accent. So he's like, so I was flying the helicopter down towards Oliver Reed's. I had 2 Swedish models with me. I said, come on, let's go and see Ollie out in the country. So he flew down, but Oliver was having one of his fits and didn't like people coming to see him. So he opened up fire on us with his machine gun. So he sat down in the local field and I said, Oliver, I've got 2 Swedish models and some champagne. And he said, come on in. So we stayed there for 3 days.
That's gold. I watched something recently with Oliver Reed in it, and I can't remember what it was. A few months ago. He was always so much fun to watch. Well, the last thing I wanted to talk to you about got nothing to do with anything, but and I saw this in the Fin yesterday. It just tickled me no end. It was an article about Albo, and the G7 meeting that happened in lieu of the Quad. And it said the G7 Leaders Summit focused on condemning Russia's invasion of Ukraine, a message emphasized by the presence of President Volodymyr Zelensky, and tackling China's economic and military coercion. Don't like economic coercion, Tony. We don't like it. We want them to stop it. We want them to curb their ambitions.
And, of course, we'll use coercion to achieve that goal.
The headline of the article was Australia to get a bigger slice of IRA billions. Australian mining and energy companies could get expanded access to billions of dollars worth of subsidies from US President Joe Biden's signature Inflation Reduction Act under deals to grant special status to the country's defense, manufacturing and critical minerals industries. So it's like, support our military engagements and support of Ukraine, et cetera, in return for economic gain. But we don't like China using economic coercion to get its way. And they're like, they're not even pretending anymore. Like, it's in the, like, the one that always amused me before this was a year ago when they said, Russia has, no right to invade Ukraine. But if the Solomon Islands do a deal with China, then we will invade the Solomon Islands. At least those stories were side by side. This is in the same bloody story. It's like, don't look around my eyes. Don't look around my eyes. Look into my eyes. Look into my eyes. Don't look around my eyes. Like, how the, like, I was just boggled by this.
We reject economic coercion by China, and we look forward to the billions of dollars the US government will pay us to support their military.
Support their, yes. Like, seriously, in the Financial Review. Like, I mean, it tickled me no end. Like, really? Who, like, either the journalists and the editors putting this stuff out are pissing themselves laughing when they write these stories, or they're just completely clueless about the hypocrisy in their own article. Not to mention Albo's hypocrisy by even getting on board with all of this stuff. He's a
politician, so of course he's...
I like that he came back saying that Russia needs to curb their ambitions. Really? Like, what?
Can you imagine how you'd feel if you were a Russian? Who said this? Austrians? Who are they? Where are they?
Let alone Xi Jinping. I mean, really? We have to curb our ambitions, says the Prime Minister of Australia.
That's very uppity of you. Go back up.
That just boggles my mind. We're seeing Robert Forster on Friday night.
Oh, lovely. I was going to ask, is Chrissy playing?
No, and Robert's wife, Karen, reached out to Chrissy this week and sort of did a quasi apology. Basically, she was saying that the violin part of that song is too sensitive for them. They're not even putting it in the song, so nobody's playing it. Because the story is that Karen was supposed to play it, but she was sick with the cancer and she couldn't, so they brought Chrissy in to fill in for her, but they're not playing it, and something. But anyway, we are looking forward to it. Should be a good fun night.
Yeah, no, I read one of his posts on Facebook saying he was looking forward to the concert in Brisbane and was having lots of
local friends.
And
Yeah. Sadly, Chrissy is not one of those, but we'll be there. Well, I would love to see her on stage. She could do some kung fu moves too while she was doing it. A bit like Elvis in his Vegas years, doing some karate moves in a white jumpsuit in the middle of the songs.
Oh, that's great. I could see you doing that with your Elvis glasses.
Oh, yeah. Those are the days. All right. That's it for this week.
Yeah, very good. Well, we sort of talked a lot about things there, not all financial, but hopefully people won't mind. And send us questions, people. Come on, we do this. We go off on tangents because we don't get enough questions.
That's right. It's your fault.
It's your fault,
listeners. Right. Your fault. Yeah.
As Jenny points out, we're men, and it's never our fault. It's always something else.
That's true. Well, okay. When she's right, she's right.
All right.